following with what we're saying right now, we could say that there is a let's go again for a downward position. Once again, this actually was a big drop. So, all right, there we go. We've made, I was about to go to 200 if I would have lost this. Hey everyone, it's Alexander here and welcome to my new channel. I'm a trader with over 15 years of practical experience, and today I'm going to show you some of my daily trading routine. But before we get started, let me tell you more about me. When I was a kid growing up in the United States, I had this great economics teacher, Mr. King, who made me fall in love with numbers. That is exactly where it all started. My curiosity about how money moves, how markets behave, and how numbers can actually tell a story. Over time, that curiosity grew into a passion. I got deep into trading, technical analysis, indicators, charts, all of it. And one of the things that always fascinated me is how binary options can be traded using pure technical analysis, with no guessing, no luck, just logic and patterns. So in today's video, we're going to talk exactly about that. How to analyze the markets properly, read signals, and make smarter trading decisions in binary options using technical analysis. By the way, this is one of my first videos here on the channel. And if you're into trading or you want to really understand how real traders think, make sure to subscribe, hit that like button, and turn on notifications because there's a lot more great stuff coming up. So let's get started. Because this is my first video with you guys and I'm not quite familiar with all of your experience, I'm going to start with something that I found to be essential, really, is the ability to set up support and resistance levels. You see, when you go into graphical tools, you're able to set up vertical, horizontal lines, right? And maybe put it over here and say that, hey, look, this being the top in the previous couple of hours, the top position where the asset has reached, it came down, it came almost to it. See this with regards to this wick of this candle. Came back down again, it kind of touched, but didn't really close with regards to the body of the candle. It did touch a bunch of wicks, but there we go. It kind of came up over here again and came back down. So this being a resistance level, which is still kind of factual, it's usually confirmed when the asset reaches a level 3 or more times. Now, there could be certain things like a false breakout, right? We'll cover this, actually right here, we see this, right? We got the asset that came to this level once, twice, it kind of came third time, there's a false breakout, which means where it reaches beyond the level of resistance or support, and then on the next candle, it closes above it or below it, and then comes right back down within this channel. So we actually got kind of like a decent support over here because we got 1, 2, 3, 4 point contacts. So when we're setting this up, we actually can say that, hey, this one is definitely, we can actually change color. I don't know. There we go. Make it turquoise. All right. So it's definitely a really good level of support. And if the asset reaches this level here and breaks it, we have a higher likelihood that it's going to continue to break downward. But if it comes back to here and bounces away, we got a higher likelihood that it's going to continue to bounce away. This, though, it's not really a confirmed level because technically, well, we would start kind of like this. There we go, a little bit of horizontal. This would have been actually a good one. Look, we got 1 point contact, 2 point contact, 3 point contact, and on the fourth one, it broke through. Actually, I probably would have opened the position for a buy here, but you can see that it went down and it did go up before it kind of, once again, reversing. Now, so right now we're kind of seeing that maybe if in the larger time frame, we could actually see that this is a false breakout, like a 3-minute candle. We would be able to see that, yeah, it came out on one candle and came right back down on the other. So right now it is interesting aspect, right? Let's start with something a little bit more conservative. You can actually see that I did open for $100 position right here where it broke through, and I didn't make it, but on the next candle right here, I did open for a 200. It did go in the money. As you can see, I lost $100 here, but I made $184 here. So we're in profit at the moment. But whenever I do technical analysis, the reason why our positions are a little bit less extravagant is because we're not using any indicators for confirmations. We're going just right down to the basics, right? People will be stimulated to buy or sell an asset depending on the level of the asset or the price, right? Imagine right now if Bitcoin is at like $30,000. If it came back down to 90 and you realize, wow, it went from 90 at some point to 115, then from 115 to, well, it retraced back to 90, and then at some point it reached even higher. And this is where certain people are like, oh man, I wish I bought it at 90. But when the asset comes back down to that level, they have extra stimulus to open the position again, right? To have this kind of a gusto, a reason to open the position. So right now we got like a relatively good, actually, let's set up. I like to set up expirations at the end of the minute, right? So in 21 or 20 seconds from now, this candle is going to close, and on the following candle, we'll be able to open the position and we'll see. But we do have a relatively decent down force right here with the relatively big candles going down. So it's natural that somewhere it should have a bit of a retracement, perhaps come back down to test this level once again, right? And if we're actually, not necessarily playing this game, but if we're following with what we're saying right now, we could say that there is a possible. All right, look at that. Wait a second. There we go. Let's actually set this off to the side for a second. And there we go. For the next 39 seconds. All right, I don't know. Let's see. Let's open the sell position. Oh, we actually overshot this. All right, let's sell position. Now, this being a big candle, I'm actually taking a little bit of a risk stating that it should continue to go down. But technically, I think I did take it a little bit premature. But when the candle closes outside of this particular support level, we got a higher likelihood that the position or that the asset will continue the move. All right, so we got expiration and there we go. All right, so we're in the money. All right, there we go. I was about to go to 200. If I would have lost this, I would have done exactly the same thing as I did right here. I would have went for a higher position and came back down, or I would have been in the money. But let's see if we can. Oh, again, I didn't change. There we go. Let's go again for a downward position. Once again, this actually was a big drop. So is there a chance that, yeah, there's going to be a bit of a retracement and a continuation? Yes. So that's why usually in my, best kind of case scenario, I would have other indicators, at the same time showing me that, there's a big momentum, right? For example, MACD, moving average convergence divergence. Yeah, you see it does show there's a crossing of the signal line and a MACD line. It's crossing this the zero line. The histogram is crossing the zero line. So yeah, it's showing a sell signal. I mean, what else we can do? We can, you know what? I like parabolic. Look, parabolic right here, switch to the top. Once again, signaling that there should be a downward position, right? And this is something that you and I will be building over the course of next many videos. Hopefully, you're going to be able to reach out to me in Telegram channel and ask me all sorts of questions about this because I burn with the passion for this. All right, so there was a drop that did close outside. I mean, we did kind of take a position. We took another position. Technically, yeah, I would say that it's got another maybe a couple of red candles to go, but there is a now rising higher probability that there's going to be with this or the next candle are going to be green because this particular move is not really small, right? In Forex, in real market, right? If we're taking a look over here, I mean, this is, it's a major right currency pair. We got 59.40 and right here we got, pretty much 58. So it's like 44 pip movement. That's pretty big. That's pretty big. And so it's generally we understand that, yeah, there should be a bit of a pullback because if somebody opens a position here in Forex, they would have made $4,400. In euro dollar, each pip is like $10. I'm sorry, $440. I mean, I'm pretty sure that's actually decent profitability. So they would close the position, which means that it affects the supply and demand principles. And it means that there should be a bit of a pullback before possible continuation. Right, so this is it. This is how we do it. So let's kind of go through maybe some of the other assets that we have available. But keep in mind that with proper martingale positioning, you don't really need 100% success rate in order for you to be in profit. You need approximately 50-50, which is actually kind of cool. If you have proper money management, and you and I will discuss the benefits and the things to consider when we're trading with regards to proper money management. There's standard money management, and then there's martingale, and they both have their own benefits and pluses and minuses. So anyways, look, actually, if we take a look at we got like a really good resistance level over here. Look how beautiful that is. Look, we got multiple point contacts, right? We got 1, we got 2, 3, 4, 5, 6, right? 7, and finally it broke through. Well, we do have a bit of kind of sideways action here, but we would have been able to take a look at this with ADX. But there we go, right? We got 1, 2, 3, kind of also support level. But we do understand that there was a kind of crossing. Where was it? Not really, solid signal. We got parabolic saying down. We got, signal line and MACD line going up. But I don't know. So not really quite as clear. But after this broke through, I probably would have opened a few positions thinking that it's going to be going upwards. Or maybe I would have waited just a little bit longer for other indicators. I don't know. We got Fractal. Fractal probably set it over here. We got parabolic. We got Fractal kind of switching, saying that it's going to be going up, and we have the crossing of the signal line and the MACD line crossing the 0 line in the histogram. So I don't know, this would have been okay, I guess, but not really ideal. So when it came back down, we got a sell signal here. We got a sell signal. There we go, crossing the 0 line, crossing the MACD and the signal line. We got parabolic, and we actually got Fractal right on this candle. It comes a little bit late. It's a lagging indicator. Also confirming that it's a good idea to start selling. And, obviously here maybe we would have done so. So right now, let's see, a little bit more down to the current events. We got a buy signal from parabolic. We got a buy signal slightly earlier rather than that with MACD. I don't know. I think I would have also kind of been a little bit more conservative with regards to this positioning. So let's see. We have a resistance level right here. Once again, there we go. Once it broke through, we got there we go. On this candle, it broke through. We got Fractal, we got parabolic, but it is a little bit mixed signals. I don't know. Euro, Huff, OTC is not really something that it's giving me kind of clear signals, but let's see if we can hunt down something again, a little bit more concrete, a little bit more solid. Well, there we go, right? We got 1, we got 2, we got 3, we got, there we go. And the fourth one kind of started going sideways at this point. We got, there we go, a buy signal right here from our lagging indicators, but we don't have much on the leading indicators. Maybe if we would have put maybe Shaft. There we go. Shaft said here, buy. Parabolic here said buy. Fractal here said buy. And there was a breakout in effect. And we have a couple of candles going upwards, as you can see. But let's see if maybe we can find something a little bit more current. All right. There we go. We have... there we go. We got a resistance level. 1, 2, almost. But there's the third point contact. We do have a buy signal here, a little bit muddy with regards to the MACD. Fractal said buy, parabolic said buy. We had a buy signal here from Shaft. I don't know. Again, we will be able to actually get this buttoned down a little bit more with more examples. But yep, overall, this is something that we need to just give a little bit more practice, right? You go into the graphical tools, you set up you kind of take a trend line and you set it across the bodies of the graph of your asset, right? So we'll be able to understand when the asset has this, ideal moment, and then when you see right now it's between the resistance and support level, not really confirmed support level yet. It's got only a 2-point contact, but we do understand that it's a generally downward trend, and whenever we have a sell signal, it should be a little bit more, it's going to have a higher likelihood that it's going to be in the money. So we got a histogram that's kind of sawing this particular zero line. We got the signal line and the MACD line also crossing, kind of indicating that it might be an upward movement. But we do also see that the signal line and the MACD line are below the histogram, and generally it's considered a downward trend. So we should be waiting here to get a sell signal, where the MACD line, which is green, is going to cross the signal line, the red one. If we have shaft rounding out and touching the top line, and we have maybe parabolic switching to the top, or fractal, showing up here, that would be a sell signal in multiple of from lagging and leading indicators. And at that point, you might actually be able to, depending on the strength of the signal, be able to open a little bit bigger position, not just $100. But while I was talking to you guys, and we've made, like $150, $170. It's like 10 minutes. I think that's pretty good, right? A nice place to start, because you don't really want to risk a lot, because then if it goes against you, then we really see a bit of difficulties with emotional control for most people. All right, so actually, wait a second. Let's take a look to what we have here. If we got a buy signal, well, if there's going to be a breakout, we're going to have to wait until this candle closes. But if it closes on top, maybe we'll be able to see on this candle we had a fractal saying that it should be going up, and we have a possible breakout. So in approximately right now it's 2207 where I live, and for approximately like 40 minutes this asset has been going down. So there is a likelihood that it wants to go back up. Actually, to what level? It probably would be upward somewhere here. So if it does go up, we do have a possibility that it's going to go up to this resistance level, right? We got multiple times where the asset couldn't breach this point, this level. So let's see if we can, in 4 seconds, if we can take advantage of this. There we go. Let's open. So there we go. We got 1 minute or so. At the end of this candle, this position will be closed. You can see the timer and the expiration are exactly the same. Right, so let's wait and see if we make a little bit of money here. The reason why it's only $100, as I mentioned, because, well, it's not quite as evident, right? Maybe we had more signals. If this was going downward and we had the, sideways movement and parabolic just switched under, this would have been a relatively good moment to open the position, maybe with a bigger position. But right now, there is a breakout, right? And there is a higher likelihood that it's going to continue to go up. And we're going to go to our next step martingale just in case. If not a lot of people are seeing this, and maybe some people are looking at a different time frame and are selling. But yep, there we go. All right, in the money. So there we go, my dear friends. This is how it's done with regards to support and resistance levels. When you hunt down maybe a little bit big, multiple currency pairs with the OTC, you usually get a relatively large payout. You can do, kind of confident martingaling and starting off with a little bit more conservative. But the idea is the same. Once the asset reaches a particular level 3 or more times, it becomes a confirmed level of resistance or support. And when the asset comes to that line again on the 4th time or higher, you're looking at other indicators to get an idea if there is enough oomph for it to continue, or if it bounces back, it's going to continue to bounce back. So there we go. All right, that's it for today's video. We've just covered how you can use technical analysis to trade binary options more effectively, how to spot clean entries, manage your timing, and avoid emotional decisions. Remember, trading isn't about luck. It's about discipline, structure, and consistency. If you stick to your plan and trust the analysis, results will follow. This is just the beginning, my dear friends, of the journey here on this channel. So if you enjoyed the video, make sure to leave a like, subscribe, and drop a comment below about what topics you'd like to see next. I'll be sharing more strategies, trade breakdowns, and real market examples in the upcoming videos. The fundamental and technical analysis. So stay tuned, and as always, trade smart and stay focused.